We're doing perquisites now. What do you understand by perquisites? Perquisites means any benefit or amenities that your employer is giving you. So it could be in cash or it could be in kind. For example, if your employer has given you a car, if your employer has given you a house to stay, it is actually not your money's worth basic salary. It is a benefit you have got. That benefit is called perquisite. Could be that your employer is giving you a reimbursement. Reimbursement for what? For the money that you have spent on your travel or your phone bills or your child's school fees. All of that is a reimbursement. So you have paid it, your employer is reimbursing it back to you. This is also not actually a part of salary but a benefit that you have got. It is called a perquisite. Now, perquisites is also going to be taxed. Now, it is easy when you get in terms of money. So, if I have got 1 lakh rupees from my employer, I know I have to pay tax on 1 lakh. But what if my employer has given me a house? Now, the value of the house is 1 crore. 1 crore cannot be taxed in my salary. So, what is going to be taxed? So, how to value the perquisites is what we are going to study in this part. So, in short, what is perquisites? Any benefit, amenities, it could be in cash or it could be in kind, which is actually convertible into money. These benefits may be provided voluntarily or under a contract. For income tax purposes, they have divided perquisites into 3 types. Tax free. Go ahead and enjoy. For example, you get tea, coffee. It is a benefit that you are getting while at work. It is tax free. You get any refreshments at work? Tax free. You get to use a laptop which your employer gives you? Tax free. Taxable perquisite. Taxable perquisite is if your employer has given you a house to stay. Taxable. He has given you furniture in the house. Taxable. Okay. Perquisite which is taxable under specified cases. So we will see what is these specified cases. And for now, remember, it is for specified employee only. So, what is a specified employee? Someone who's at the top position, who is earning a very high salary. So, the government is saying only for those particular people at the top, we will tax these particular perquisites. Otherwise, it is tax free. For example, a motor car. A car is given. Okay, if it is given to a lower designation person who is not earning so much salary, a clerk, a peon, for pick and drop purposes, then or even for their own purposes, in that case it will not be taxed. But if it is given to the director of a company, a car, then it will be taxed. So specified cases is what we have to see. Tax free, taxable and specified cases. Now let's start with the first one. And perquisites is under chapter section 17.2. So personal benefits given monetary or non-monetary. Now let's see the first type of perquisites, rent-free accommodation. Rent-free unfurnished, no furniture, empty house is given. Now it depends who is your employer. You will see who is the employer. If the employer is a government employer, then there are certain government rules. So if you are working with the Reserve Bank has their own quarters, you are getting to stay over there. Reserve Bank, the government, has made their own set of rules for the purpose of this calculation. So you have to see that. Or you're working with the State Bank quarters are there. You're working with the railway quarters is there. So they have their own set of rules and you will have to take perquisite accordingly. So here you don't have to learn how to do the valuation. Valuation is already done by that particular employer. Next one is any other employer. So this is any other. If any other employer is there and he owns the house, if any other employer other than government, so that is a non-government employer and he owns the house, then in that case it depends where is the house located. It depends where is the house located, that is what is the population of the city where the house is given. Could be that the employer does not own the house but he has hired the house, he has rented the house for you. In that case it is easy. If he has rented the house for you, then it is easy. You will simply take the actual rent charges or 15% of salary, whichever is less. If it is owned, you will see the population of the city. If it is owned, you will see the population. Now, population of the city is less than 10 lakhs. You will take 7.5%. 10 lakhs to 25 lakhs, 10%. And more than 25 lakhs, 15%. Now, with effect from 1/9/2023, this has become less than 10 lakhs, 5%. 10 to 25 lakhs, 7.5%, and more than 25 lakhs, 10% of the salary. Okay, so for the ones who are having June 24 as their attempt, this is it. Those who have December, you will still do this only. So 5%, 7.5 and 10%. The latest. Okay. So what will you take? You will take 5% of salary. What is salary? Basic plus dearness plus all monetary benefits. Basically, your entire salary, you will take 5% of that. If you are in a metro city, you will take 10% of that. Okay. Now, what if he has also given you furniture? If he has given you furniture, very good. Then you will take 10%, and it depends the furniture is owned or rented. If it is owned, 10% cost of asset. If it is hired, then higher charges, actual rent charges. Okay. But what if he gives you hotel accommodation? Hotel accommodation you will take if only and only if the stay is for more than 15 days. If it is for 10 days, 14 days, 2 days, you will not take it as a part of your salary. Okay, so in that case, if it is more than 15 days at a stretch, continuous period for 15 days, then you take 24% of salary or hotel charges, whichever is less. What if you have to shift from one city to the other? So I from Mumbai have to shift to Chennai. In that case, I cannot shift on day one. I might have my family, my children over here. So the employer says, okay, you move over there. Let your child or your spouse, whoever is staying here, continue staying for a period of 2 months, 3 months, etc. And by the time you set up the house over there. So in that case, I have 2 accommodations. They are saying, fine, if you have 2 accommodations and it is there for a period of up to 90 days. Okay, for the first 90 days, then take only one. Lower of accommodation will be added as a perquisite. Only one. House will be taken, that also whichever is lower. If it is more than 90 days, aggregate of the 2 accommodations. So if you have for the entire year, I have 2 houses, I keep shuttling, then in that case I will take aggregate. Easy. So house, you will see the population, and if it is furniture, you will see owned or hired. If it is hotel accommodation, you will see how many days it is given. Okay. Now, then let's come to ESOP. ESOP or sweat equity. Okay, any amount of shares that are basically given. In that case, you will find the market value of the shares minus any amount that is actually paid by the employee. So let's say market value of the shares. I'm working in Reliance. Reliance share value is 2000 rupees. Okay, the employer Ambani is telling me that you take the share for 500 rupees. So I paid only 500. Taxable value of the ESOP on the date of allotment will be 1500. So he gives me the option on that day. The exercise price is 2000 on the date of exercise. But it takes time for allotment to happen. Allotment happens after 30 days, 35 days, 40 days. In that case, the value of when will it become taxable in my hands? The date when I get allotted. Okay. Now, easy. Now the thing is, for listed companies, what you will take on the same day. So you will take the opening and the closing, and you will take the average. You won't take of a particular time. You will take the average of the opening and the closing amount. Easy. Now, let's say medical facility. This is also a perquisite given. I am working for Tata Hospital. There is medical facility given to me in India. So now, if it is run by the employer, I'm working in Tata Hospital, they are giving me some medical facility, fully exempt. If I am working for Tata's but they send me to a government hospital and government bears all the charges, fully exempt. But if I have to go in, I am working in a private company and I go to another hospital, exempt up to 15,000 per annum. Exempt up to 15,000 per annum. Okay, max 15,000 per annum. Anything else that is paid will be taxable. So if 30,000 is paid or 40,000 is paid, 15,000 is exempt, remaining 25 will become taxable in my hand. So I've got a benefit of 25,000. What if medical facilities is provided outside India? So the company sends me outside India for medical facility. For now, understand, if you're going to go abroad for treatment, first you will have to incur travel, then you'll have to stay there, so stay expenses and then the treatment. So if you're traveling, you will pay the money in India in INR, then only you can buy the ticket. Okay, if you're going to stay abroad, you will pay the money in currency of that place. If you're going to Dubai, in in dirham. If you're going to US, in US dollars. In Canadian dollars if you're going to Canada. And same thing if you're for treatment, you can't pay in rupees if you're going to US. Okay, but when you're traveling, you will actually have to incur the cost in rupees. So they are saying, if travel expenses is incurred, it was exempt if the employer's gross total income is 2 lakhs or less than 2 lakhs. Basically we will give you exemption, otherwise it is fully taxable. So if the employee is earning 5 lakh rupees, gross total income is 5 lakh rupees, it will be fully taxed. Fully taxed as in that amount will be added. Stay and treatment is as per RBI norm, so we don't have to worry about that. Medical insurance, okay, medical insurance paid or reimbursed by employer for employee is exempt. So a lot of companies take group insurance, exempt. Okay, that means if I am working for a company and they have taken insurance or paid for myself any insurance, then the money that is paid by the employer for me, for my benefit, it is fully exempt. But here we are not talking about medical insurance. Here we are talking about actual facilities given. Okay. Next one. We saw over here perquisites which are taxable only in specified cases. Let's see what are those specified cases. So for specified cases, first understand what is specified employee. A specified employee is any person who is a director or has substantial interest in the company, basically has 20% or more shares in the company, so he's almost like an owner, or his salary is 50,000 per annum, not per month. Per annum he is earning 50,000 or more, then in that case he becomes a specified employee. If he is a specified employee, only then these 4 perquisites will become taxable, otherwise it won't be taxable. So if somebody is a non-specified employee, could be he's a clerk, he's a peon, he's an admin, in that case the money that he gets or any perquisite that he gets for these particular things, it will not be taxed. But if someone is earning 50,000, 60,000, 1 lakh, 2 lakhs a year, that case he becomes specified employee and these perquisites will be taxed. So let's see what are these. Sweeper, gardener, cook, helper, so it will be taxable. Transport facility provided by a transport undertaking. Concession or free education for the children of the assessee and motor car. These 4 are taxed only for specified employee. Now what is taxed? The value that the employer has paid. So in case of sweeper, gardener, cook, helper, salary paid or payable to such person minus amount recovered to the employee. So if the salary of the cook is 10,000 rupees, I am paying only 2,000. The remaining 8, the company is paying, the employer is paying, it will be subtracted. So, example, salary paid or payable to such person is 10. Employer has paid 2. So, 8 will be the taxable value. Okay. Free transport provided by a transport undertaking. Amount chargeable from general public minus amount recovered from employee. So let's say if it is a transport undertaking like a truck or a bus service, okay, and amount chargeable from the general public is 1000 rupees and I just have to pay 100 rupees. So what is the benefit? 900. Okay. But what if I am non-specified employee? Then if he is providing free transport service, exempt. It won't be taxable. But if it is a specified employee, then yes, it will be taxable. Free or concessional education. Now over here, remember, this is for the children of the assessee. If provided in an educational institution which is owned by the employer, like today Ambani's own a school in Mumbai and I am working for Reliance, I am sending my children to Ambani school. In that case, they are saying, okay, Samina, for your children, no fees or only 200 rupees is the fees. But the actual fees in that school is 1 lakh rupees a month. So, they are saying over here, taxable value is equal to cost in a similar or nearby locality minus rupees 1000 per month per child, minus amount recovered from employee. So they are giving me only, so if it is 1 lakh rupees, I don't have to pay anything or pay 1000 rupees or 2000 or 3000 they are taking from me. That you pay only 2000. The remaining 98,000 will be fully taxable. Okay. Be fully taxable. Now, over here, they are saying if the value of the fees, if the fees is more than 1000, fees more than 1000, okay, and the benefit is more than 1000, fees and benefit. So basically, fees is 1 lakh, I don't have to pay anything. They are saying then it will be fully taxable. The entire fee benefit that I am getting will be fully taxable. So let me give you an example. Fees is 800. From assessee or employee, they are taking only 200. So up to, so what is the benefit of perquisite? 600. I can claim an exemption of up to 1000 max. So what is the taxable value? 0. So 1000 is the maximum exemption up to 1000. So I will pay 0. Okay. But let's say if the value is 80,000, employee has to only pay 200. The benefit is 78,800. Exemption is up to 1000. Now obviously this is way above 1000. Now they are saying the entire 78,800 will become taxable. Because this amount cannot be above 100, above 1000. And it can't be this 1000 rupees benefit they will get. Okay. Let's take another example. 1300. I am paying only 200. This is employee is paying this much. 1100. The benefit is more than 1000. Full 1100 will become taxable. Anything which is above 1000, there is no exemption. Max is 1000 rupees per child. Okay. Now motor car. Motor car we'll see in the end. Okay. If the employer has given you a car, depends on 3 things. What is the purpose? Is he giving only for official purpose or personal and official both or only personal? Okay, depends on which car he is giving, the type of car. Is it a big car? It is a small car? What is the cubic capacity of the car? And the third thing, who bears the expenses? Expenses of car and driver. Who bears that? So he gives you car and driver, expenses of car plus the actual car. Who's bearing all of that? Okay. So these three things will then determine what is the perquisite of the car, but we'll see later on. Okay, let's go to the other ones. Interest free or concessional loan. In that case, interest rate. So let's say I need 50 lakh rupees loan. I want to buy a house. Now if I go to the bank is giving me at 10% interest. So 50 lakhs into 10%. I have to pay 5 lakh rupees every year. Okay. My employer is giving me 0% interest rate. What is the benefit? The entire 5 lakhs is the benefit. He's saying, okay, Samina, for you only 1% interest rate. 5 lakhs. Okay, if this was only 1%. 50,000. 4,50,000 will be fully taxable as perquisite. Okay. So what you'll do, rate as per SBI, what is the prevailing market rate and what is the interest paid by the employee to the employer, and the benefit is actually what will be taxable. Now, if it is a small loan, if the loan taken is less than 20 lakhs or if it is taken for medical reasons, then it is fully exempt. Then you will not see, if it is for medical reasons, you will not see the amount. If it is less than 20,000, you will not see the SBI rate, nothing. It will be fully exempt even if it is a tax-free loan. Okay. Now, this is important. Leave travel concession. This is exempt under section 10(5). What is the meaning of this? Companies give money to their employees to go and travel. How much? That, listen, you are working so hard, you need a break. Now, they are saying you can travel to any place in India for the employee and his family. Now, what is family? Spouse, up to 2 children, okay, dependent siblings and parents, and children. They are saying earlier, this was before October 1998, there was no limit of these 2 children. Only after October 1998, this limit came. So exemption is only for 2 surviving children. But what if, but they are multiple births, or if they are twins, then those twins are considered as 2 are considered as 1. So if X has, for this particular section 10(5), Mr. X, who is the assessee, he has 1 child and then he has 2 twins. In that case, and all are after, they are all born after 1/10/98. Okay, they are all born after 1/10/98. In that case, all of them will get the exemption. Okay, these 2 children will not become 2 because 2 twins will be considered as 1. However, if this was ulta, okay, first he had 2 twins and then he had 1 child. So this is first and then he had 1 child. Only the 2 twins will get the exemption. This 1 child will not get the exemption. Okay. Now, let's see if you are traveling, what is the exemption. They are saying if you are traveling by air, wherever you want to go, the first class airfare is, the economic class airfare is allowed. The amount that you spend for your spouse, for yourself, 2 children, depending siblings and parents, whatever you spend, entire amount is allowed as an exemption under 10(5). If you are traveling by rail, first class AC rail fare, any other mode, if no air rail travel is available, then first class deluxe fare. Now, exemption is available for 2 journeys in a block of 4 years. So basically it's not every year you get a LTC. You get in 4 years, you get twice. Okay, you can claim in 4 years twice. So now this block, who decides? The block is for your exams is 2022 to 2025. This is the block right now. Okay, the previous block was 2018 to 2021. After this, there will be 2026 to 2030. That will be the next block. So like these different blocks are there in this year. Between 2022 to 2025, you can travel twice. Now, if an employee has not availed a travel concession or assistance in respect of 1 or 2 permitted journeys in a particular block of 4 years, then he can carry forward 1 journey. So he has allowed is 2, he can carry forward 1. So basically, in the next block, that is 26 to 30, he can now get 3 journeys available. 2 he'll already get, which is already there, and 1 more. Okay. Now, the next one, and very commonly everyone gets this by employers, free food and snacks. It is only if it is given in the form of coupons, vouchers. 50 rupees per meal is exempt. But if you get refreshments, okay, refreshments, tea, coffee, biscuits, it is not taxable. But if you get a voucher, you can go and buy. Okay, then in that case 50 rupees per meal is exempt. So if I get one voucher of 75 rupees, 50 is exempt, 25 rupees will be taxed per voucher. Okay, so best is instead of giving 2 150 vouchers, 2 75 rupees vouchers, give 3 50 rupees vouchers. So number of vouchers they are not taking account. They are simply taking account of the voucher value. Okay, next one is gifts and vouchers. Any gift card you get, etc., or any gift, then up to 5,000 rupees is exempt. So if you get a rupees 8,000 rupees gift, 5,000 is exempt, 3,000 will be taxable. Okay, next is club facility. Lot of companies are nowadays giving you club, corporate cards, clubs, etc. If all employees are getting it, then it is fully exempt. But only you as an employee is getting it. Not everyone cannot come to the club, and only few employees are getting it, then it will be taxable. And only for you. Okay. So also if only you are getting it, but you're supposed to use it only for business purpose, like you have to take your clients to fancy lunches, dinners, then you're using it, then in that case it is exempt for everyone. Okay. Credit cards, if my credit card bill my employer is paying, then obviously it will be fully taxable. Let's say if any movable asset is given to me, movable asset, my employer gives me iPhone 15. In that case, use of movable assets, or he has given me a washing machine, a nice fancy TV, 10% of the actual cost of the asset if it is owned by the employer. His TV has given to me, so only 10% of cost of asset. If he has rented it to me, then the actual rent charges. Okay, so if I want to see a huge 75-inch screen TV, he rents it for me, then whatever rent he's paying will be taxed. But if he gives you any laptop, computer, it is not going to be taxed because it is only during my work. The day I leave, I have to return the laptop. Okay, transfer of movable asset. If they give me his fridge, his AC, his phone, it is given to me, it is my asset now. So that is, here see, here it is only use of movable asset. That's why you're taking only 10% here of actual cost of asset. Here you are actually transferring the asset. So if it is mine, I can sell it, I can destroy it, whatever I want. So if it is any electronic given, 50% depreciation for every completed year of usage. So example, if I have purchased the asset on 1/4/2022 and I have given it to the employee on 1/9/2023, don't tell me you will take it for 1 year and 6 months. No, you will take it for only 1 year, because how many years have been completed? Only 1 year. 1/4/2022 to 1/4/2023. Only 1 year is completed. In that case, depreciation will be 50%. So if the employer has bought it for 1 lakh, the value today is 50,000. 50% will be depreciated. Same thing goes for car. Okay, car the employer bought for 10 lakhs. He is transferring it to me on the same day after 1 year of use. 8 lakhs is what is the value of the perquisite to me. For car it is 20%. For all other assets 10%, and that too SLM method. You have to take SLM method, straight line method. So you will simply take the value of the let's say if a fridge will fall over here, fridge value is 1 lakh, 10% is 10,000. After 2 years he has transferred the fridge to me, 2 completed years. So I won't take first 90 and then 9,000. I will take, I'll give you over here, fridge value is 1 lakh. Okay, after 2 years it is transferred to me. So if it is transferred after 2 years, first year is how much? 10,000. Second year is also 10,000, because we are doing SLM method. Okay. If it was not SLM, what you would have done? 1 lakh less 10,000, that will give you 90. Then you would have subtracted again 10%, which would have been 9,000. Okay, this would be 81. So this will go on. But we have to take SLM for all other cases. What if any health club, sports benefit, etc. is given to you? In that case, you will take, no, it is not going to be taxable, because it has to be provided to all employees, and all employees can use the gym facility, not taxed. Any other benefit you will take on actual cost or expense. Actual cost or expense. If he is paying, if the employer is paying your phone bill, mobile bills fully exempt, because it's understood it is for your official work only. Now, remember we had kept car aside, we said we'll come back, but I had told you 3 things that you have to remember. What is the purpose? Okay. What is the type of car? Big, small, etc. And who's bearing the expenses, plus who owns the car. Who's the owner and who bears the expenses. These 3 things will determine everything. Okay. Now, bear the expenses. This is again taxable only in the case of specified employee. Correct? Only for specified employee. Where valuation of taxable value of perquisite in case of motor car, where the expenses are met by the employer. So we are going by this. Who's bearing the expenses? What is the expenses of a car? The gas, the fuel, the general maintenance, etc. Who's bearing it? The employer. And this is generally what happens. The employer gives you the car and he bears all the expenses. Now, if it is, remember, if it is given for official purpose, there are only 3 types of purposes. Okay, so there would be purposes would be okay. There would always be 3 types of purposes. Official, personal, official and personal. Okay. There are only 3 types of purposes. There are only 2 types of cars. We'll call it big car, small car. And expense and ownership are 2 things. who owns it and who bears the regular expenses. Okay. Now, whenever it is official, you will simply say, because it is it is not for my work, it is for the business of the company, for the business of the employer. It is not going to be taxed, not taxable. Okay, so we don't have to worry about personal, official. But if it is personal, it is always going to be taxed. It is always going to be taxed. Now, if it is personal, they are saying that you are enjoying it for your own good. So, whatever is the actual expenses, you will have to bear it. Okay. But if it is a mix of both, for your purpose also and my purpose also, official and personal, then there are some limits which you also have to learn. Okay. Here it will be actual expenses. This is what you have to learn. Car is owned or hired by the employer wholly for personal purpose. Then the running, maintenance, hire charges, salary would be treated as taxable value of the net amount so recovered from the employee, including depreciation. And so this is the actual expenses of the car. Okay, but what about the we are talking about personal, so it will be actual expenses. But what about the ownership? If the ownership is also of the employer, then you will simply take 10% of the value of the car. 10% on SLM basis you will take value of the car. Simple. Okay. Now, if it is official and personal, so I said you'll have to learn some limits. That limits will be based on what is the type of the car, big or small. Okay. So now, how do you understand big? Big is basically if the cubic capacity of the car is more than 1.6 liters. And if the engine capacity of the car is up to 1.6 liters, so less than or equal to 1.6 liters, then you will take 1800 per month. If it is more, you will take 2400 per month. Okay, so 1800 and 2400 depending on what it is for official and personal. Then you will not see this need expenses. You don't have to see anything. It is one flat rate. Okay. Here what you did, you saw for the expenses you charge 10%. And for the car ownership, you charge 10 actual expenses plus the car cost 10%. Okay. Now let's go to the next one. Car is owned, hired by the employee. Again, for wholly official purpose, you will not take it as a perquisite. For personal purpose, okay, it is owned. So the car is owned by the employee. Here again, ownership is that of the employee. If it is owned by the employee, then we are only concerned with the benefit that the employer is giving is of the expenses. Because the ownership of the car is of the employee. So you will actually take, if it is personal, you will take the actual expenditure. Okay. Car is owned and hired. If there is a both. So this is personal, this is official and personal. In that case, you will have the taxable value of perquisite would be the actual expenditure as reduced by the tax determined above by basis the engine capacity. So what you will do? Car is owned, hired by the employee. Car is owned or hired by the employee and it is owned, hired by the employee. Employee is there and only expenses you have to take. In that case, they are saying that whatever is the actual expenses, see here, whatever is the actual expenses minus 1800 per month if it is a small car, actual expenses minus 2400 if it is a big car. Okay, remember this is important. What will be the taxable value of the perquisite? Taxable perquisite. Okay, whatever is the actual expenses, what is small car here? Less than or equal to 1.6 liters engine capacity. Okay, this is a big car. Now, so here what we saw, all three, we saw over here the car expenses and ownership both is of the employer. Here if the expenses are that of the employee. Okay, now next one, valuation of taxable motor, where the expenses are met by the employee. Okay, so only what the employer is giving you, he is giving you the car. Car is owned and hired by the employer. So what you will take, and it is for personal purposes. If it is for personal purposes, and this is official and purpose. If it is for personal purposes, 10% on SLM method, you will take the value of the car. If it is official and personal, what did I say? You will have to learn certain limits always. For official and personal, you will have to learn certain limits. Now here, see, keep in mind that in the first one, there was a car and given to you by the employer. Here, he is only giving you the car but not the expenses of the car. So obviously it will not be 1800. It will become lesser. It will become how much? 600. And it won't be 2400. It will become 900. Now, okay. Now this is only when expenses are given. Also, what if a driver is given? If the driver is given, remember this one fixed amount, chauffeur is provided 900 rupees per month is to be added. Okay, chauffeur is provided 900 per month is to be added. Easy. Again, let's go through it. If it is, just remember this. Okay, we'll just purpose. If it is official, it will never be taxed. If it is personal, actual expenses and the value of the car is going to be taxed. Actual expenses, if the expenses are borne, and if even the car is owned by the employer and given to you, then it will be taxed. Now, ownership is always 10% cost of asset. Always ownership is 10% cost of asset. Personal, always remember it is on actuals. And official and personal, you will remember limits. Okay, so if it is a big car and both is given to you, what is both? Expenses are also borne by the employer and the car is also borne by the employer. The expenses is also borne of the car and the car is also given. So it is 1800 if it is a small car and 2400 if it is a big car per month. Now, what if only expenses are borne? Okay, expenses, car is owned and hired by the employee and expenses are borne by the employer. So what he is doing, he is only bearing the expenses. It's my car. In that case, you will have to take this. Actual expenses that is borne by me, by the employee, by the employer, minus 1800 per month because it is official and personal. What is he bearing? The actual expenses less 2400 if it is a big car. For what? For only expenses because it is official and personal. Now what if he is bearing only, the employer is bearing the actual value of the, is only giving you the car, not the expenses. If he is only giving you the car, you will take 10% cost of asset if it is for personal. If it is for personal and official, 600 and 900. Okay. And if it is a driver along with it, in all cases, driver is 900 rupees per month for official and personal. But what if for personal purposes, he has given you a driver, then actual salary paid to the driver. Okay, always remember, for personal purposes a car is given, it is all taken on actuals, and the value of the asset is 10% cost of asset. Now let's go to the next part and the last part of income from salary, profits in lieu of salary. Profits in lieu of salary is basically, it's not technically while you are in employment, but it is still going to be counted as a part of salary. These payments are received by employee in lieu of or in addition to salary or wages. Compensation received on termination of employment. Just that, please go away. But retrenchment compensation is one of them. Compensation on modification of terms of employment. Earlier they had employed me, work from home, my salary was lesser. Now they are saying, now you come back to office, and they are giving me an increased lump sum amount. Why? Because they are changing modifying the terms of employment. It will be taxed here. Amount received before joining or after cessation of employment. After leaving the job, I'm still getting money from my employer, profits in lieu of salary. On the first day of joining, without even working, I'm getting a joining bonus, profits in lieu of salary. Payment received by employee from provident fund or any other fund that he has provided or he has made for me, for the employee, profits in lieu of salary. Compensation received under key man insurance policy. Now please understand what is key man insurance. As the name suggested, one of the most important people of the organization is called a key man. I as in the company takes an insurance policy that if this person leaves, okay, there will be a loss caused. So let's say the key man leaves or dies or something happens. Now the insurance policy will give a lump sum amount. This lump sum amount, if it is given to the employees, okay, then in that case the money that the employees receive from or due to the key man insurance policy will be taxed under this head only, profits in lieu of salary. It will be added to the salary. Okay, so we are done with income from salary.